You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Nick Hansen here is in the CEO blockchain seat and at the edge of his seat. I'm so happy, Nick, that you've joined us today. And I have to tell you, this is a different kind of interview for me because, well, you're an engineer. So I really hope you can kind of speak in layman's terms on some of this stuff because our audience is principally made of financial advisors and investors and not your typical engineer. I'll just say that.
Okay,
So
of
thank
course.
you so much for joining us here. And you've built a really interesting company with, I think, 90 employees. Congratulations on
Yeah,
that.
so it's actually more like 50, but yeah, we're hopefully we'll be 90 by the end of the year.
Well, everybody's got to have goals to get to 100. Who knows, right? But
Yeah,
50 is a
yep,
good size firm anyway.
yeah.
By the way, just as a reminder, in case you forgot, we both went to school in Colorado, right? But you being the engineer didn't go to Colorado College like I did. You
Didn't
went to the School of Mines.
I did, yeah, in Golden. Graduated there in 2011 with a computer science degree. Was very excited to get out of college and get into the world. And as I think I mentioned when we first met, went to Department of Defense contractor for a couple of years, but really cut my teeth in technology at Salesforce, which I started there in 2014. So and then spent most of my time at Salesforce as a professional until I went on to launch Luxor.
Yeah, Salesforce, definitely a name in the news of late, but it's a software company, and you guys also do software as well. You call it firmware, but it's software, right? Um,
Yep.
Now, talk to us a little bit about your firm and the different divisions and how you're at the what I would say kind of the nucleus of proof of work.
Yeah. So if you go and Google Luxor Technology, most likely you'll find something related to our Bitcoin mining pool. That's our flagship product, and that's what we're known for. And it's really like you mentioned, the nucleus. It's the center of our ecosystem. All of the products that we build are as a result of that. Basically, we're at the center of the mining story, and so we are able to, we're in a unique position to be able to launch a lot of products as a result of that. So inside of a mining pool, basically what a Bitcoin miner is doing is just randomly guessing numbers and hoping that it solves the lottery. And what a Bitcoin mining pool is doing is just making sure that if you have 100,000 machines, that they're not guessing the same number. So I tell you to work on numbers 1 through 1,000, this other machine to work on 2,000 to 3,000, some other machine to work on 3,000 to 4,000, that sort of thing. And if they ever run out of numbers, they reach out to the pool and get a new set of numbers to work on. And basically, those guesses are proofs of work. So each of those guesses require some computation to do. And then when they submit the guess, that's called a share. And so that's what we're effectively doing for Bitcoin miners and as a Bitcoin mining pool. And then the way we make money is we take a fee whenever the reward is found. So whenever a block is won, or in this rudimentary example, the lottery is won, we take a small portion of the fee, of the reward as fee, and that's how we generate revenue from the pool. But that is changing. Lots of pools now run at no cost, meaning they don't charge any fee. They make their fee on other services. And so that's something that we've been expanding into, is all of these other products and services that are related to mining. So over the course of 2022, we made some really big bets. We bet on what we call firmware, which is that's the software that actually runs on the mining machine, on the device. The devices are about the size of a shoebox, maybe 2 shoeboxes now. They're getting bigger, but it's the actual software that runs on the device. And we're able to unlock either other performance or different configuration possibilities, a bunch of stuff that is, you can kind of equate it to back when you would jailbreak your iPhone. It unlocked some potential that was inside there. And so that's what we're doing, with our firmware product line. And that's again, we're basically just taking a fee on the mining rewards. So if a miner makes, does 100 terahash per second, or mines at 100 units per second per day, we take 3% of that, or whatever the fee happens to be for that particular customer. So that's one of the products that we started building. We've also started building financial products around the value of hash rate, which is something we'll probably dig into a little bit more later. But we produce an index value very similar to the VIX. We call it the Luxor Hash Price Index, and that's the value of hash rate at any point in time. We produce that rate every 15 seconds and then produce a daily settlement rate. And then on that, we're able to settle financial contracts. So we have a non-deliverable forward. We call it the Luxor Hash Price NDF that has monthly tenors. And that's another product that we built on top of this mining pool concept. And then we also do a lot of machine brokerage. And so we have a new product called Luxor RFQ, which is a place where folks that are looking to buy or sell mining machines can go and do that. You probably ask, why don't you just do that on eBay or Amazon? But the reason being is that it's actually quite a nuanced sales process, which does require a lot of hands-on intervention at different levels. You have to do international logistics and customs, shipping, receiving. You got to have forklifts, and just like there's a lot of the complexity of the physical world seeps into the brokerage business. And so that's why we built a purpose-built platform for doing mining machine sales. Right now we focus very much on new machines, but we do want to start exposing used machines as well, which adds a whole nother level of complexity, because you get into like debt on different warranties and debt on arrival, all sorts of things can happen in shipping. So those are some of the products that we build. Obviously, we've gotten into Ordinals with the acquisition of Ordinal Hub, and a lot of different things that are very in parallel to mining, but the center is Luxor Mining Pool, and that's really the story of Luxor.
Simple definitions. Proof of work. What is it?
Yeah, proof of work is a consensus mechanism, meaning it's a way for everybody to agree on what the state of the world is. And the reason in proof of work is basically saying I'm proving that I'm interested in this consensus by wasting some energy. I'm proving that I've done some effort by submitting these proofs. In the lottery example, it's submitting the tickets. I've proven that I've gone and crunched the number, and then here's my lottery ticket to prove that I've done that work. And so I now have a monetary incentive to provide the correct consensus updates. So when we're all agreeing on what the state of the blockchain is, you need to have some incentive to not be nefarious, some monetary incentive. And that's what we're doing with proof of work, is distributing that monetary reward and ensuring that the chain remains secure.
And since, math doesn't lie, you can't really manipulate it.
Exactly. Yeah. You can't fake proofs of work because so we're using, instead of lottery tickets, I'll maybe get a little more technical, we're using what's called a hash function, and hash functions are provably random, meaning if you put some data into a hash function, you don't know what hash you're going to get. So the only way that you can find hashes that solve them is by doing a bunch of random data work, and so that's what we end up doing, is just churning through tons and tons of data, producing hashes, looking for ones that solve the problem, and that's your winning lottery ticket. And so when you submit that lottery ticket, you've proven that you've done billions, if not trillions or quadrillions of hashes.
Now, you also you mentioned something called pools. Break that down a little bit, because I can guarantee you most people don't, on my side, don't know what a pool is. And you've got 9 of them. Why do you have 9?
Yeah.
Too, by the way.
So we actually started mining not Bitcoin, because we were, this was a nights and weekends hobby project, and Bitcoin Bitcoin is a much larger ecosystem than you can support nights and weekends. You need a full-time team dedicated to this. But you have some small altcoin. The altcoin that we started with was called Scicoin, and it was maybe there were a couple hundred miners on the pool at any point in time. With just, between the hours of like 7 p.m. and midnight, I'm able to support that type of ecosystem. But now that we have hundreds of thousands of machines, like that's requires a full-time job and a full-time team. So that's why we have more than one pool. But we really right now mostly just focus on Bitcoin and the Bitcoin mining pool. Now, what is a pool? So if you have, if you imagine that there are millions and millions of mining machines around the world, they're all competing for one Bitcoin block. Those Bitcoin blocks come every 10 minutes. And so the odds of your mining machine ever solving a block are actually very, very low. Like you most likely, the probability of any individual mining machine mining a block is almost zero. And so, well, then how do I, but there are blocks being mined. So what you do is you join a pool and split the rewards amongst everybody. So if you have, say you have 1,000 machines, you contribute to them to the pool with everybody else that has thousands of machines, and now your pool looks like 100,000 machines instead of one. And somebody inevitably in that bag of 100,000 machines is going to solve the problem. And then we use the proofs of work to determine how much effort was expended by each individual contributor. And so that's what a pool does. And then, like I mentioned, mathematically, it's just like solving a lottery where you just randomly select numbers. So the pool makes sure that those 100,000 machines are working on unique work, which is unique numbers in this case.
Yeah. So, we're investors in what I would call the institutional miners, right? And
yep.
your client on this level is typically not an institutional client. It's more of an individual, maybe a large individual investing, and that's one of their benefits of participating with you is the pools that they're part of. Is that fair to say?
We serve all sorts of clients, right? So we have we have guys that have one machine. Like, I don't know if you can hear it, but I have a machine downstairs running. It's running at Luxor Pool. But we also, we have customers that have 3 to 5 machines or even 10 that are sitting in a co-location somewhere. We're past the days of being able to really run these things at home just because of the size and they're also super loud, which a lot of people don't really think about. But we also serve customers that have tens of thousands of machines. We work with a lot of the public miners, either on the mining pool or through our brokerage business or firmware, all of these different things. We cater to all customers. We try to build a platform that fits the single miner as well as the miner that has 10,000 machines. And so all of our customers, we have different products for all of them, but we do try to service the entire industry, not just a particular vertical.
So using the vernacular that I hear so often, you're also a hoster. That's what you're saying.
So we don't actually host any machines. We make the connection to other people that do have hosting capacity, but we don't actually have any physical infrastructure ourselves. I shouldn't say we have a few hundred machines, but not any meaningful portion of machines.
Okay.
That's not a meaningful portion of our revenue mix. And also we don't have any infrastructure, but we do have partnerships with those that do.
Okay. And is it fair to say, and I know we're going probably down a rabbit hole that maybe to some is not so exciting, but I'm always interested in learning about somebody's like business.
Yeah.
The software firmware that you're speaking about helps to make machines more efficient, which increases the probability of winning an reward rather, right?
Yeah, just a little bit. Yep. So, we're in mining, the margins are very, very thin. So if you're able to improve the profit margin of a mining machine by 1%, that's a huge win. Miners are, like, for example, mining, up until around this time last year, mining pools were, miners were squeezing mining pools for, we're talking about individual bips, like, the difference between 25 bips and 30 bips on a mining, mining pool fee was crucial. And so if you're able to improve efficiency by 1%, most firmware is able to get somewhere between 8 to 10%, which is a huge win. And also the configurability is another aspect. So, you take that 8 to 10%, and that gets added directly to your bottom line as profit. That's a huge win for these miners. And so they're somewhat clamoring for the ability to unlock their machines and start doing this sort of thing.
Yeah. I definitely hear you, especially during the winters, right? Every little bip matters in a huge way, especially when you perhaps have your costs changing as well.
Yes.
meaning energy prices going against you at some
Yeah.
point, as an example. Yeah. So also you've got an interesting division. At least I find it interesting in the context of your research.
Yeah.
Can you talk to us a little bit about your research offering, how people can get to it, meaning your website,
Mhm.
right? And frankly, I mean, is that just a gift to society, or is there a way to make money doing it?
Yeah, so we started. So the what you're talking about is a property called Hashrate Index. It's hashrateindex.com. The idea there is that you can go to hashrateindex.com and just see all of the mining metrics that any pro or even amateur miner is going to use to determine profitability, investability, IRR, all of the metrics that you would use when trying to measure whether what the profitability of mining is, what the mining ecosystem looks like. And it started, again, very bootstrapped, just like Luxor. The story of Hashrate Index starts at the beginning of 2020. We were pioneering this concept of hash price, which is the value of hash rate over time. So when you go to hashrateindex.com, one of the very first things that you'll be presented with is a chart, which is hash price, which is it's dollars per petahash per second per day. Today, that number is about $75. So if you had 1 petahash of hash rate, you would make about $75 per day with that. We wanted to start tracking that because we're like, okay, we want people to start getting comfortable with this. So let's put a website out there that just tracks it over time. So Eddie, our co-founder, went out and started indexing Bitcoin, and we put up a website, and Guzman and Ethan went out and spread it to the world. And over time, people started really liking the idea of that's all we showed was just this graph that showed the value of hash price over time, called the Luxor Hash Price Index. And as that started to grow in ubiquity, we decided, okay, well, this could actually become more of our retail focused or our research arm. We could do in-depth articles. So we went and got Colin Harper to join, and he's a great long form writer. He writes probably the best quarterly mining report available. And he also does a great year-end review. He also has a great newsletter, which is on hashrateindex.com if you're interested in learning about market trends week over week. These are, this is kind of what, this is what spawned, hashrateindex.com. And now hashrateindex.com is like the premier place to go to learn about all this stuff. We hired Jaren from, he's a Norwegian, and he's joined and is now working on hashrateindex.com full time. We've also got, Alessandro, excuse me. We've got we've got Alessandro, who joined and is now like helping pump out more content on our socials, so people are aware of what we're doing there. And really the idea is just to be we try to be as unbiased as possible and produce high quality content that anybody can find useful, whether you use the Luxor products or not. So that's why we separated it out and made Hashrate Index its own entity and own property.
So candidly, there's some debate these days on whether or not crypto mining is a good business or a bad business.
Yeah.
The publicly traded ones, they're showing huge losses, in part because of the depreciation. Don't get me wrong.
Yeah.
When you're selling equipment on your site or pricing equipment on your site, you're showing potential return on invested capital. Talk to us a little bit about the business of mining and why it's a good business.
Well, a lot of times it's not a good business. So you gotta be aware of that for sure. It needs to be well thought, but that could be said about any business. If I go into lawn mowing, the chances of my business being successful are very low. So I know nothing about lawn mowing. The same thing could be said about lots of businesses. And so really the thing is you just have to be very armed with lots of good information and understand, how do I make a good business out of this? I've heard, Wes Fulford, used to be CEO of Bitfarms, went on to, do great things elsewhere, told me that Bitcoin mining is one of the best businesses in the world because it's so easy to predict. But the thing is, you have to really nail down the fundamentals, and I think that that's where a lot of us, especially even me, I wouldn't say that I was immune. Were unprepared for the level of volatility that we saw from 21 to 22. Now, what is that? What do I mean by that a little bit more specifically? In 2021, the public miners were getting valued on one thing, and that was contracted hash rate. All of the public miners were basically, if you announced that you had more contracted hash rate, then your market cap went up, which is a very easy model to turn. You print more money, you get more money, you print more contracted hash rate, your market cap goes up, and you basically just feed the beast over and over and over again. And that's what they did, and it worked great. The problem came with how quickly the mining economics moved away from miners. Not only did Bitcoin price go down, but hash price went down significantly over the course of 2022 as well, which is what caused these very aggressive loans that miners were taking out to become untenable. They became cash flow negative, and ultimately that's what led to what we saw, the huge washout towards the end of 2022 in late Q3, early Q4, and even throughout Q4. And then of course there compound that with the skyrocketing energy prices, that it pretty much was just like the perfect storm to rinse out all of these public miners. So I think we used 2022 as sort of a kind of, I don't want to go as far as to say black swan, but it was really close to what you would call like a black swan event for big miners, because all of the events that would occur to cause them to get washed out did. They didn't get to the end of their amortization schedules. They weren't. All of this stuff happened like right in the middle of the depths of their notes. All of their covenants, hadn't made it through like all of the covenants on their notes. Hash price was declining rapidly. Machines weren't quite turned on yet either. Like that was another thing, was like all the machines had started to show up, but weren't actually turned on. So they weren't actually even producing much cash flow. And then on top of that, when they were able to start plugging in machines towards the end of Q3, early Q4, the price of energy had skyrocketed. So the machines they turned on weren't even that profitable anymore anyway. So it was just like a confluence of events that caused the public miners at that time to look pretty bad and be and ultimately wash out what we saw.
And I could add that interest rates went higher as well, right?
Yeah.
So cost of capital was also impacted. Talk to us a little bit about hash price. What exactly do you mean by that? I just want to make sure everybody has context.
So hash price is the amount of US dollars that you get per day for a unit of hash rate. We normalize that around something called petahash per second. A petahash per second is about 10 machines. So if you had 10 machines hashing for 1 day, then you would generate right now around $75. And so that's what we call hash price. Hash price is a number that anybody can calculate. It's just like, just like the VIX has its equation to calculate what the VIX is at any point in time. Hash price has its equation as well. And it's really just the miner subsidy, the amount of reward that you get from mining blocks of Bitcoin, divided by the network difficulty, which is the number that changes over time as more machines are added to the network, times the price of Bitcoin, and that's the number. And we produce that rate every 15 seconds, and then we create a time-weighted average of that rate called the settlement rate at UTC 0 every day.
Okay, Mike Venuta, if you're listening, maybe we can talk about coming up with an ETF that does that a calculation. And, Nick, we'll talk about that at another point. So let me ask you a different question. There's always some kind of debate on which leads first, equipment price or Bitcoin price, right? Where do you stand on that? And where are we right now with Bitcoin? I'm sorry, for where Bitcoin miners are being sold, because they're really depressed. I understand that there's a huge surplus. I don't want to ask you to make the call which direction they're going to go, but which leads which, and where's the price right now for equipment in some kind of context?
Very explicitly, the price of machines is driven by the price of Bitcoin. We have suppliers that update their pricing daily based on the value of Bitcoin. A lot of times those numbers are just based on, they have like some internal ROI metric that they look for. They say, okay, we want, we think the fair price for these is if these machines ROI in 30 months or whatever that number happens to be. It's very, very algorithmic. We have seen, that's another number that we started to produce on hashrateindex.com was the rig price index, which is something that Guzman started. Again, it's kind of like a hack day project. He went and started scraping telegrams and WeChats and websites and all sorts of stuff to come up with, like, I don't even know how many it is now. It was hundreds of different data sources for different machine pricing. And then every day we go in and like clean up that data and then produce what we call the ASIC index data. So the ASIC index data is used by financiers. That is a data set that we do sell. Financiers, some of these law firms that have been related to some of the bankruptcies are looking to see, like, how can we mark this book of ASICs? What can we use for that? They use the Luxor ASIC index data for that, or the Hashrate index ASIC index data. But we have seen prices somewhat flatten and maybe even go up a little bit in the last month or so. They bottomed out around $12 to $13 at the beginning of January, and now we're seeing them close to $14 or $15 per terahash right now. So that's seen a little bit of increase in machine prices, but we've also seen a broader increase in Bitcoin price since then. So I would certainly say that that ASIC prices just follow Bitcoin price, but it's not one for one, because there is that downward pressure on ASIC prices when hash rate is increasing. The ROIs do extend on those.
Yeah, and I get what you're saying, but which is the predictor? I would say, if you're going to build a facility, you have to buy the ASIC miners, right?
Correct.
So you need them. So if Bitcoin price is going up, you're going to be able to afford to buy more equipment, which is going to drive the price up. Right? I get that, but we're at a point right now where candidly nobody knows exactly the direction of Bitcoin. Maybe you do, by the way. Good luck.
I don't. I wish I did, but I don't.
Yeah. So should we be looking at the demand for equipment as evidence of confidence that Bitcoin price is going to go higher? Is what I'm trying to ask, or the price will go higher and then the mining equipment will follow?
That's what you'll see. So if you that's generally what you see. They are pretty tight. I would say that you'll see, if Bitcoin were to jump 10% right now, you'll see overnight ASIC machine prices will reflect that. But it does lag maybe, but it's not like a long-term lagging indicator.
That's
almost immediate.
Yeah. And by the way, that index is very well followed that you guys have created.
Oh, appreciate that. Yeah,
so it's something that everybody should be looking closely at. So this is pretty terrific. Okay, so now let's have the fun part. There was a huge development that occurred in December. Talk to us a little bit about Ordinals and inscriptions, and again, speak for me as a layman so that everybody can understand, because I think this could be I don't want to overstate it, but maybe a game changer to certain degrees.
Yeah, absolutely. So this is a huge development in Bitcoin. So I'll tell you. So inscriptions and ordinals are very closely related. They are different things. Inscriptions are basically NFTs on Bitcoin. And if anybody here has been following NFTs at all, that's an ecosystem. I missed entirely on NFTs. I always thought that was kind of I never really thought there was going to be too much interest there, but that is a huge industry that has tons and tons of artists and a lot of interest across different ecosystems, mostly segmented from Bitcoin, not in Bitcoin, mostly in Ethereum, Solana, some of the layer 2s on ETH, and some of the other layer 2s is generally where NFT activity occurs. Somebody named Casey Rodamore came up with this concept that you could potentially store some of this data into what's called the witness. It's a part of a Bitcoin transaction. You could store maybe a little bit, like quite a bit more data than we actually thought you could store, up to 4 megabytes of data per block. 4 megabytes is not the most data you've ever seen. Like if you load Instagram, you're going to use way more than 4 megabytes of data to load those images. But you can put some, rudimentary imagery directly into these blocks at relatively low cost. What makes that's been known for a while, but what makes that interesting now is this concept of ordinal theory. Ordinal theory has been around for a long time, long before all of this. And it's the idea that you could individually number Satoshis. Satoshis are the smallest unit of account on Bitcoin blockchain. There will only ever be 21 million Bitcoin. You can also say there will only ever be 2.1 quadrillion Satoshis. And the idea behind ordinal theory is that you can individually identify each and every single one of them as their own unit of account. And that's the idea behind ordinal theory. So there's, you can expand on that and say like, okay, there's rare ordinals, like maybe the first ordinal, maybe the first Satoshi of a block or the first Satoshi of a difficulty adjustment. Obviously, the very first Satoshi ever minted would be the most rare, but that is unspendable. So that will be always locked in the first Bitcoin block. So that's this idea that there is like ordinals are this number. The real key unlock was that using some Bitcoin magic, we'll just call it Bitcoin magic, you can apply the ownership of an inscription to an ordinal. So an inscription can be owned by an ordinal. So if I have an ordinal and I apply an inscription to it, it's called inscribing, I inscribe onto that ordinal, I can then transfer the ownership to you. So you now own the inscription through a standard Bitcoin blockchain transaction, just like I would send you money. Instead of, I'm sending you one Satoshi that happens to have a picture associated with it. I'm moving that pointer to you, and you now own it. And so this has like been a really key unlock for Bitcoin. We've seen massive adoption from all sorts of different NFT ecosystems. We've seen Yuga Labs, which is the group that made Bored Ape Yacht Club and CryptoPunks and Mutinate Yacht Club and so many different very prolific Ethereum NFT ecosystems. We saw DGods, which is the company that made DGods and a bunch of other NFTs on Solana, come in. They've already minted or created their NFT ecosystem on Bitcoin. And this is just the start. The floodgates are already open. And so we went from, let's see, on the 31st of January, I tweeted that everybody should calm down because there's only 355 total inscriptions. And it didn't seem like it was accelerating because everybody was kind of freaking out about this. When I say everybody, I mean like people in like the Bitcoin world were kind of freaking out about this. Well, now we're going to probably go over 300,000 inscriptions today. And so it's what, 28, I guess it's 31 days later, 300,000 inscriptions, most likely by the end of today. So it's been incredible, the amount of growth and the amount of inscribing that's actually being done. And it's so that's the long and short. Hopefully that makes a little bit of sense. Tried to break it down.
Well, it makes a lot of sense on a lot of levels, because by the way, this is somewhat correlated to when the price of Bitcoin went higher, right? So,
Yeah.
So or not correlated is wrong, but it's a similar time frame. But explain to us a little bit about why anybody should care. So there are more pretty apes running around. I mean,
Yep.
Why does that matter?
Yeah, so as a core Bitcoin holder, it's hard to say if this will cause any, like if you're uninterested in NFT art, it's uncertain whether this will have any impact on you day to day. It may be a little bit harder to run home nodes at home because you have like some extra data, but it's not that much data. It's it's maybe a few gigabytes. But over the course of a year, it'll be about 200 gigabytes of data if every single block is full, which they aren't right now, but they could be. Let's just say assume they're all full. Every block is full. It's around 200 gigabytes of data added to the blockchain. So that makes it a little bit harder to run maybe your own home node. But overall, I don't know what impact it will have on just a Bitcoin holder if you're uninterested in NFT art or anything like that. It may not have any impact at all. It may not impact the price. It probably won't impact much of anything. Really, you'll just probably see on your favorite exchange another tab for ordinals or inscriptions.
But beyond just art, are there applications for it in other capacities?
So there could be. Some folks are trying to do some. So there's a DNS is like when you go to like a .com, that's called a domain name service. People are trying to build something similar to that in Bitcoin. They did something in Ethereum called the Ethereum name service, ENS. They're trying to do the same thing in Bitcoins like BTC, like nick.btc or luxor.btc. We'll see if that works. It may be more of a layer on top of Bitcoin than it is really Bitcoin, because there's no like Bitcoin protocol for resolving a name in directly inside of Bitcoin. It would have to be some other layer adding that extra context and that extra logic. But that's something that people have seen, or something that we've seen people do. You can embed very basic web pages, like somebody embedded a very pared down version of Doom into one of these inscriptions. So there's that. You can load JavaScript. Somebody loaded up if you load one of these inscriptions, it asks for access to your webcam, but that's just loading in a JavaScript library to do that. So there's a lot of interesting things. So we'll see.
So this is effectively making Bitcoin more of a technology. Is that fair to say?
It's more of our interpretation of what this extra data means, because Bitcoin isn't doing anything with this data. Like there's no like renderer in Bitcoin for rendering the images. It's like we're requesting the data from Bitcoin and then interpreting it the way we want to. So it's not like Bitcoin is really doing anything here. It's just the permanence of the data that's more interesting. So, we know that like you can't change data on the Bitcoin blockchain. Once it's there, it is there, as permanent as anything gets in the world. That is
immutable, as they say.
That is immutable as it gets. And so when that is the interesting part here, it makes that data perfectly immutable. Like before this all happened, I inscribed a picture of my friend. My friend said, "Can you inscribe my family?" And I was like, "Sure." So I inscribed a picture of his family, and like that picture will long outlast anybody that's in the picture, long outlast all of us, most likely all of the nations that exist today, just because of what Bitcoin is.
Okay, so I want to change the subject a bit.
Okay.
And talk to you a little bit about your private company. Congratulations on all your growth. I don't want to get too specific, but what are you seeing from the venture capital side of the world?
Yeah.
And have they backed away, or is venture capital alive and well despite Bitcoin going down like it did last year?
Yeah, so let's go through some of the more recent years. So there was the 2021 year when inflation, or how do I say, valuations were massively inflated. Anybody that was raising money in 2021 was getting an awesome multiple. We're talking 40 or 50x, 40 or 50x on forward-looking revenue, which is incredible. Like that would be that would be amazing. Luxor would be a multi-billion-dollar company.
It is.
That
you just
was
don't realize it.
Yeah, that was an incredible year to raise in, if you were raising. But you then had the year of 2022 where almost all venture by the end of Q2 and then into Q3, almost all venture was turned off. Anything growth related was turned off. There were very, very few companies in 2022 that were getting funded. The few verticals that you saw getting funded were AI and cybersecurity. Those were the two that you saw continue to get funding. throughout that year, even into the growth stage. But in general, growth funding was just turned off. And what I mean by growth funding is that that like $30 to $100 million check was just turned off. Like SPACs were pulled back. People that were getting ready to go public in some way pulled that all back. There were multiple mining companies that had announced that they were going to go public and decided to pull that off the table. And so, 2022 was really a year of contraction. And then we saw maybe towards the end, really what in my mind, what venture is afraid of is the massive plunge downward, because we don't know where things are going to land. But as we started to plateau a little bit towards the end of Q3, early Q4, in that low 20 range, we started to see, okay, this is the new normal for a little while. Maybe we can start doing some checks. So we started seeing some funds, some fundings get done. And then I think that has progressed into Q1 here. We're here getting ready to close out Q1 in a couple of weeks. I would say that trend continues. It seems like there has been some acceleration. I think we saw, QuickNode got a big check raised $70 million. So, we are seeing some crypto native companies in the growth stage starting to get funded again, which is great. It's exciting. I think we've anybody that's made it through this far has proved that they're a lasting company. And then really it's just what is the trajectory from here? What is your growth coming out of what was a pretty bearish year? And I think there is still like a pretty bearish global sentiment, but that doesn't mean that business doesn't get done.
Yeah, we're speaking to public companies about their projects and involvement in the blockchain, and hearing for the most part, they're not backing away. They can't afford to. They're just being a little bit smarter. And to your point, the rich valuations were unreasonable or unsustainable, and so we've come back down. So I always like to ask two random questions. They're random to me, but maybe not so random to everybody else. The first one is, looking backwards a couple of years, 5 years from now, right? What do you think will be the thing that was so obvious that was changing the world about blockchain crypto that everybody should have noticed at the time in hindsight?
It's going to be the energy transition and Bitcoin's catalyzing role in energy. A lot of folks generally, right now there's a pretty big misinformation campaign against Bitcoin as a very dirty technology, uses a lot of energy. It does use a lot of energy, but using energy is not inherently bad. We've been somewhat trained to think that using energy is synonymous with waste and not being useful. We should be trying to reduce energy usage. We have seen many throughout all of history, as we are able to produce more energy, the quality of life for the average human goes up. So we should be striving to use and unlock more and more energy. The reason that using more energy has been conflated with being bad is because of the carbon story. Right. And so if we're emitting more carbon as a result of using more energy, maybe that is bad. There is maybe some research to say that it's not, but let's just assume that it is. I think that Bitcoin will incentivize the best use of energy because it is directly monetizing that energy. You're basically able to take energy and turn it into money, which before required a lot of different steps in between. Like right now, it's Bitcoin mining is the most direct way to take energy to money. Before you would have to put, say a factory with a textile mill in between there, and energy goes into it, but there's a lot of other externalities that need to go in. This is the most direct way to monetize energy. And so I think that is going to be the story of Bitcoin and Bitcoin mining here over the next 5 years. We're already seeing it. We're being used to load balance in places like Texas, where there's a lot of intermittent generation. Intermittent generation meaning they're generating energy, but they generate a lot of energy, but the spikes in the amount of energy they generate at any given time are quite high because they're using solar and wind, and the wind doesn't always blow and the sun doesn't always shine. And sometimes they do the same thing. The sun shines and the wind blows at the same time. So you have like a ton of extra energy. During those times, Bitcoin miners are able to soak up all that extra energy, or a large portion of that extra energy, and help balance out the grid, where otherwise they would have had to figure out a way to either dispose of it or spin down other capacity, which ultimately results in the grid being far less efficient. So I think that right now what we're seeing is this transition towards more and more dynamic load resourcing for Bitcoin as a direct result of Bitcoin miners that are participating in the grid.
So you're a believer, I think, that energy and Bitcoin miners they're gonna become even more of partners than they even are right
Yep.
now. Maybe there's going to be even some consolidation in that area.
Absolutely. Yep. I certainly think if there's anybody that's positioned to take advantage of of buying up a big miner, it would be energy producers.
Yeah. Let's
Okay.
cover your acquisition that you just recently made to that
Okay.
point, actually. Why'd you make it?
So Ordinal Hub, what you're referencing is we acquired a property called ordinalhub.com. The reason we did is because it's happened within the first week and a half of Ordinal Mania. I was kind of like learning how Ordinals worked on, say, the first, and we had agreed and had a handshake agreement to acquire ordinalhub.com by the 8th, and then completed it on the week of the 10th. So it was all very, very fast. And so really what we wanted to do, well, we found that Ordinal Hub had they'd set themselves up very early and were taking advantage of having very much a first mover advantage. And, Luxor is a technology company. The folks that were building Ordinal Hub were, just using the tools that they had. We were like, let's bring it into Luxor Technology and use, the engineering capacity that we have to really make this thing great. And that's where we're at now, is adding all the functionality. So we have 3 verticals of Ordinal Hub that we're really focused on right now. They're called Discovery, Explore, and Market. And I'll get into each of those quickly. So Discovery is really what we call the ability to discover new projects, see what's coming. It has imagine calendaring, different events, and just discovering what's available, what's coming out, what exists, just getting oriented. So we call that the discovery platform. There's Explore, which is digging into a particular project. Say, I want to dig into Bitcoin punks. I go and I can find all of the inscriptions associated with Bitcoin punks. I can dig into the artist. I can see different Genesis metrics, like when it was inscribed, who owns it currently, all of those sorts of things. And then the final piece is Market, which is, we're not certain we want to build a marketplace, but we want to be a place that you go to learn about different markets. So you can see, say, auction houses or peer-to-peer marketplaces or centralized marketplaces. All of these things, we think, basically, we want to be the funnel for you to go and learn about where you would go and buy these things. So those are the 3 focuses that we have right now. There's a lot of interest in this right now. There is a lot of folks working on really cool, Bitcoin specific technology for transferring ordinals using atomic swaps or partially signed Bitcoin transactions. Really high level cryptography being done for the sake of exchanging ordinals in a trustless way. And really excited to see where that all lands.
Well, good luck with your acquisition. If you want to try one more time on which industry is going to be disrupted,
I guess I'll just go with art. That's an easy one because it's
okay.
That's the easiest one to go with right now. I'll say art for now because it's the one that's top of mind, is the one everybody's thinking about. It's certainly, I would say art, semiconductors. Maybe that's another good one for sure. I think the semiconductor industry is it may not be directly impacted by mining, but mining is certainly going to be impacted by it. We have semiconductor manufacturers coming to the US, which I think that's a matter of national security. And I'm really happy to see that the US is leaning into getting chip manufacturers here in the US. I mean, it takes a ton of time, a ton of money, but I'm really happy to see that we're doing that. So, yeah.
spoken as a true engineer and entrepreneur. Nick, thank you so much for being part of the CEO Blockchain series. We look forward to seeing all your success in block and tackling and building a great company.
Awesome. Thank you so much, Dan. Hope you have a great rest of the day. Have a good one.
Thanks. Bye.